Let's get your business news now. Devin Murugan joining us. Hi, Devin. So it looks like EOH's turnaround strategy is actually yielding results.
Yes, good evening, Sally. Indeed, EOH Holdings may begin making a profit again soon. It provides a range of technology solutions to the public and private sectors. Now, the firm has reported an 83% improvement in its headline loss per share in the 6 months to end January, but revenue dropping by 29% year on year. This was largely due to the disposal of non-core assets and the dismantling of problematic public sector contracts. We'll remember that from 2 or 3 years ago. The company has been undergoing a restructuring process which included getting rid of underperforming operations. It also says it's managed to get out of 5 of its 8 public sector legacy contracts. And we want to pick it up there. Let's get more now from EOH Chief Financial Officer, Megan Pydigadu. Megan, thanks indeed for talking to us. So cutting costs and reining in debt, that for all intents and purposes was the strategy. No doubt you'll tell me it's been working.
Yes, Devin, it definitely has been working. If you look at where we were 2 years ago, we had debt of 4 billion. We're now sitting with debt of 2 billion. We obviously want to reduce that further, and we are looking to sell 2 remaining assets that will bring that debt down further. I think it's also been about quality of earnings and making sure that we do good business, and that can be seen in terms of the margin improvement we've seen both at a gross profit level and at an EBITDA level. At a gross profit level, our GP margins were up over 3% to 27%, and EBITDA margins were up 0.5% to 8.3%. From a HEPS perspective, we are still making a loss, although at an operating profit level we made a profit, which talks to the fact that the core business is performing. And the main reason for the HEPS loss has really been as a result of our interest burden and also our historic legacy legal structure, which we're looking at refining and reducing to a far more simpler structure. So we're very happy with the 6 months and the delivery of the results for this period.
Let's talk about those public sector contracts. I see that 5 of them now have got some sense of closure. Where are we with the others?
So of the remaining 3, 1 comes to a natural conclusion at the end of April, and then we'll be out of that one. And then 1 we ceded at the end of March, and that's been resolved. And then the last remaining contract, we actually had given notice on it at the beginning of January, and we're now working through a 6-month handover period. So for all intents and purposes, we should be out of those legacy contracts by the time we get to our year-end results, 31st of July.
Megan, I'm wondering what's the moral, the morale like among the business managers, because you've lost 1,000 or 1,500 jobs by reducing your headcount, mainly through selling or closing these non-core businesses. How are business managers feeling about those closures?
So in terms of those job losses, they actually are only employees lost to EOH. A majority of those went with businesses sold. So we have still kept people and employment intact there by selling those businesses. And from a morale perspective, I think the business is feeling good momentum. We've seen some good wins coming through. We see trust coming through from both blue chip companies and the public sector, where we have won some multi-year contracts with both the public sector and in the blue chip space. So I think definitely the momentum is coming through, and people are feeling that the turnaround is working and that we've made progress from where we were.
So much of that turnaround, and this is my final one, will depend on the ICT future in South Africa. What's it looking like for you? I mean, surely it would be time to buy distressed businesses. That could be one option.
So from our perspective, what we have seen the trend coming through is that there's been a strong acceleration from a digitization process within businesses. We have seen our hardware business had dropped off from a revenue perspective as businesses start to consider moving towards the cloud, and that's come through in our IOCA digital business, which does cloud automation, security and application development. There we saw growth of 15% in revenue. And then also in our digital industries business, which basically is IoT and automation for mines and large industry. There we saw a growth of over 30% from a revenue perspective. So those digital trends are definitely coming through, and I think we're in the perfect place to take advantage of them, as well as the fact that we have some small IP businesses that we also have the opportunity now also to accelerate and create bigger platforms for those businesses. So that's our core focus at the moment, is looking at our IOCA business and seeing how we can grow it out organically.
All right, thanks very much indeed from EOH there, making Pydigadu. Thanks indeed for your time. She's the Chief Financial Officer.